Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, lots of questions about where I feel the gold and silver market is going to go. And there are a lot of good questions. Heck, even I've been picking at the brains of a lot of different people. All I could do is make a comparison to what's happened in the past. And if we look back to what happened in 2007, 2008, then there's some positive news in a big way. And I'll show what I'm talking about here in just a moment. Before we get started, though, do me a favor and hit the thumbs up button. If you are not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. If you are thinking about buying gold and silver, you should check out our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you spend more than $100, use promo code PIMPY, P-I-M-P-Y, and you will get a free half ounce of silver. All right, if we look at cryptocurrencies real quick, you can see they're starting to rebound just a little. Now, before you guys get all crazy and start running back to cryptocurrencies, let's make sure there's some consistency here. Although Bitcoin did take a pretty good little leap. It's up $1,276. Currently, Bitcoin's at $21,614. Ethereum is now at $1,236. XRP, the New World Order coins, coming up 34 cents. Cardano is at 47 cents. And Solana is at $38.47. Dogecoin is up from 6 cents at least to 7 cents. Polkadot is sitting at $7.26. Shiba is finally above the 4010. It's now at 4011. And Polygon is now at 55 cents. Overall, the markets are moving into green, which is looking good. Some of them nearing double-digit gains. Looking at the new Satama coin, the V2, it is at 0030. It was down a little bit, but staying around that 203 level. Not bad at all. As you can see, it's slowly rising there. If you look at the 7-day pattern, it's all in the green. That's why I'm saying just hold on to them. Because if it's true and cryptos start to make a slight rebound, all the cryptos are going to go up. And for those of us who are now switched over into this new version, it's not even at 1 cent yet. Not even at 1 cent. So as the other cryptos start to rebound, so will Satama, and it'll go up just like everybody else. See, I can't resist but look at Luna all the time, because Luna's been slowly creeping up, and there's not a lot of people talking about it. Anyways, that 30114, looking good. All right, we'll talk about silver and gold, because look, people, don't panic. I'm telling you, I already warned people it was going to drop down a little bit. I'm going to show you a comparison to 2008 that should make you feel really good. Anyway, silver slightly creeping up. It's at $19.20. We were starting to make a nice rebound on July the 5th, and then it took a pretty big hit, just like gold did, but slowly but surely creeping back up. So again, silver at $19.20 an ounce. Gold sitting at $1,739.80, up slightly from where it was. And as you can see, we go by the hour-by-hour chart. It's got the same look as silver does. Gold at $1,739.80. I was talking about how currencies around the world are starting to collapse. This is a planned event. Not only do they want to do away with the United States dollar as the reserve dollar, but they want to do away with currencies all over. And not only that, they want to do away with paper currencies all around the world in the first place. This would be the excuse for them to move us into the central bank digital currency. So here we are with another nation's currency losing a ton of value. Nigeria's currency falls to record low as traders track central bank's largest dollar sell. So now their currency is almost worth nothing. Don't worry, United States will get there too. That's the whole goal, is to do away with the financial system and replace it with a new one. And that includes currencies all around the world. It says gold price forecast. Gold markets are attempting to recover. Remember, we're talking about paper gold and silver when we see these things. says gold markets have bounced just a bit during the trading session on Thursday, as we are most certainly in an oversold condition. Oversold. It's not oversold. There's a shortage on precious metals. So when they say oversold, they're obviously not talking about physical gold. They're talking about paper gold. So just keep that in mind as well. At this point, it should also be noted that the trend line from 4 years ago should continue to cause a bit of a noise as well. And I'm going to show you what they're talking about. Anyways, this article is stating that the $1,800 level is the level for resistance. I don't think we're going to have a problem with breaking that. When I heard Dave Chrysler talking about a comparison to 2008, I had to come and look at the charts. The pattern that we're starting to see happen right around here is the same one that happened right around here. There's going to be some bottoming out, as people know. We're going to have a crash in the market. Depends on how big the crash is. We're going to have a dip, because when people panic and they want liquidity, they will sell their precious metals. And people who have the money know to wait around like sharks in the water. Once they start dumping their physical on the market, you can grab it up at a discounted rate. And then all of a sudden you see us go back on the bull run. Now you can see right here in November 2008, go to sit at $716.80 is not too bad. You buy it at that cheap and then turn around. By the time it got to November 2011, you can see it's up to $1,794. That's a pretty good jump. That's a pretty good run. That's the kind of run that's going to be anticipated right over here. Now, like I was talking about, silver's like the spastic kid on sugar. It shoots up faster and higher and then comes back down. So you can see right here in 2007, 2008, in March of 2008, silver sitting at $20 an ounce. It drops all the way down to $9.29 an ounce. But then from that October 2008, by the time you get to April of 2011, look where silver is. It's at $48.58. After what happened in 2008, when we were going into a recession, its recovery was much quicker, much higher percentage-wise than gold was. This is what I'm talking about. That's why you want to be holding on to silver. Don't get me wrong, you want gold, but you definitely want to be holding on to silver, because it will go up quicker, but it also comes down just as quick. What you want to do is, once you feel like you hit its peak, and turn around and swap it for some gold. Boy, I would love to see it get back up there again, wouldn't you? So if that's the case, and we're seeing the same trend from $9, what is that? What is this? 500% increase? Just over 523% increase in value in just 3 years. Nice, we'll take it. Let it happen again. So hopefully these patterns will continue. It just depends on the recession and how long, or if we're in a depression, is going to make a world of difference. But what's happening in the markets right now is the same thing that happened in 2008. Anyways, you can hear Dave over here on Chris Marcus's channel. I will leave a link to Chris's YouTube channel. If you haven't checked him out, go check him out. He has a lot of great news and information when it comes to silver. But listen to what Dave has to say here. It's just a brief part of the interview, but check out what Dave has to say, because it's important.
Sure. So, in terms of what's going on with the dollar, right? It's like it just keeps going higher inexorably, it seems like. And my contention is that that is a bad omen for the financial system, because it reflects, first and foremost, the dollar, even though we know that it's being slowly phased out of being the reserve currency by the rest of the world, it's still considered a flight to safety asset, especially for Western financial money managers. When the dollar squeezing higher like this is reflecting the fact that there's massive problems growing or percolating in the global financial system and the credit markets. And the evidence of that is, I don't know if you have the charts from our live roundtable, but the
reason why there is a credit problem, remember, we are a type of economy that is a debt-based economy. In other words, in order for this economy to be successful, we need to get ourselves in more and more debt. But once people start tightening up, they start paying off as many of their bills as possible. They start holding on to their money, they're saving. They're investing in the assets. They're not out there getting all willy-nilly with their money and spending it crazy and getting themselves into more debt. So if people stop going out there and using credit, well, then you're going to have a credit problem.
Move index is now at its highest level. The move index is essentially the VIX for the bond market. So, and as the move index goes higher, it means the volatility in the risk perception connected to the credit markets and the bond market is rising. And as you can see, you don't want to do the 30-day trial. As you can see, we're back to where we were back in early 2009. And at that point, the Fed had already started printing a lot of money and was papering over the problems that caused the 2008 financial crisis. But really, to me, it's more important to look at we're back to where we were in 2007 and 2008 when it was spiking higher. So, and then the other evidence that there's credit market turmoil brewing is the cost of credit default swaps is starting to spike, inexorably higher. Also, the chart of that would look similar to the move index chart or the chart of the dollar. So what I believe is happening, and you can, the COT report somewhat captures it, is I believe hedge funds are, to some extent, they're doing a fundamental trade where they're covering their dollar short or getting long dollars through the futures market. And against that, they're shorting or selling euros and yen. Because if you look at the composition of the dollar index, the majority of the dollar index is composed of the euro and the yen as contra currencies. And those are like, obviously the yen has been crashing versus the dollar, and the euro has been steadily selling off for quite some time. There's also a few other currencies in there, but that have been declining other than the Swissy, but their movement versus the dollar aren't as consequential.
See, that's what I was talking about before, that there are a lot of currencies out there truly collapsing. The euro is collapsing, the yen collapsing, Nigeria, we already know Venezuela's gone, the value of the Zimbabwe dollar gone. So there's a lot of devalued currencies out there. There's multiple countries, and this is all part of this great reset, their plan to kill off the fiat dollar and then make an excuse to get us into the central bank digital currency. But, Dave's talking about it right now. One currency after the other is falling as the dollar gets stronger for now. But what's going to end up happening is people are going to start selling those dollars back and flooding the market with those dollars. And there is like a bazillion dollars out there.
To the value of the dollar index is the euro and the yen. So I believe what hedge funds are doing is they're buying dollars, paper dollars. And when I say paper, I mean through the futures market. And they're selling or shorting yen and euro against the dollars as contra currency trades. And at the same time, right, isn't the old rule of thumb, gold goes down when the dollar goes up? So they're selling their paper gold long positions and getting short paper gold. And that's what's causing what we're seeing in the dollar, and what's caused what we're seeing in, I'm glad you referred to it as paper gold and silver, what we're seeing in the paper gold and silver market. It's not happening. What's going on in the paper gold and silver market isn't being reflected in the physical market. I mean, I've been asking people for weeks now, please identify large entities that are out there on the global market selling large quantities of physical gold.
You already said physical gold, not paper gold. Who's out there selling physical gold? That's why I bring up in these videos, don't do what they say, do what they do. They're dropping down to paper market value of gold and silver, but they're also buying physicals. So they are getting rid of the paper gold and silver and buying the physical, just like everybody else should. So like Dave said, he asked who out there is actually selling physical. It's not happening.
You can't do it because there aren't any. Yeah, mining companies are selling gold and silver, but that's because it's their business. It's how they keep the lights on. And the banks are, they're brokering that gold and silver into buyers. So what you're seeing in the paper gold and silver market reflects the supply and demand dynamics of the paper and silver gold markets, not the actual market for physical gold and silver.
So that's what I bring up when people ask me a lot of questions about gold and silver. I say, stop panicking. You're looking at the paper value of gold and silver. That's not the true value. You could tell that gold and silver has a lot more value than that because people are out there buying gold and silver with high premiums on them. You heard Dave asking around who the heck out there, any major entity, selling large amounts of physical gold or silver. They're not. They're getting rid of their paper, gold and silver, and exchanging it for physical gold and silver. So this manipulation can only go on for so long. I know we keep saying that, but that's just the truth. There's not enough gold and silver out there. There's problems with copper, there's problems with nickel. And I'm going to start doing videos about that because a lot of you are asking about copper and nickel as well as other metals. I can tell you right now, zinc is starting to go up. So we got rid of the copper pennies because copper was too expensive. It cost 3 cents to make a 1 cent coin. So we turned to zinc. Now zinc is getting too expensive for our pennies as well. So there are other precious metals you can get into, but you definitely don't want to be playing around with the paper side of that. You can actually go over to Money Metals and buy pounds of copper, or at least you used to be able to. Let's take a look. So if you come over here to Money Metals, you can see you got a silver tab, gold tab, and it says other. Over here they have platinum, palladium, rhodium, and copper. So you can see right here, you can get 34 pounds of copper pennies for $167. 34 pounds of pennies is a lot of pennies. But if you want to buy copper and invest in copper, there you go. You could buy 34 pounds from Money Metals. So I will start talking about the other metals here shortly. But I just wanted to go over. I keep telling people I don't know how people could panic when it comes to gold and silver. Yes, it's experienced a slight loss in value, but I would not panic over it. I already told people this is going to happen. But you've seen what happened to the stock market. We also saw what happened to cryptocurrencies. It's one thing to lose 8%, 10%, 11%, but it's totally a whole other thing when you lose 78, 79% of your value. So hopefully everybody held on to those assets, hang tight. It looks like cryptos are slightly moving back up. Let's see if there's some consistency to it and if crypto start to rebound. Hopefully they do for those of you who are still holding on after taking a major hit. But as far as gold and silver, yeah, just don't part with it. I'm telling you, just hang on to it. Some of you are feeling desperate. There's a lot of things going on. You're asking me where to sell your gold and silver. You should have a local coin store near you. Somebody that does gold and silver. They'll buy the gold and silver from you. Or reach out to Money Metals. If you have a large amount of it, they will buy it back from you. But I think it'd be a mistake. I say hold on to it, hang tight. You've seen the charts. We've been through this before. And then you see what happens. We go on a major bull run, and the value jumps up there big time. Anyways, that's it for now, you guys. Do me a favor, once again, hit that thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel. And I surely do appreciate it. And I will catch you later. I'm out.